Morning, online people. Good morning to all of you, and my Colombo people. Good morning. We are, meeting after some time. No, meeting after some time. Hello, Sipat. Good morning. Right. Okay. Um, Today the plan is to revise a key area, right? A key area that is tested in section C, obviously. Transfer pricing, right? Transfer pricing, in my opinion, is a bit of a tricky area, people. It's tricky. There are no methods, no what do you call standard, step-by-step approaches in deriving the answer. It's a bit confusing, right? So I'll be looking at two questions. One, an easy question. The second one, not so easy, right? That's a big question, people. So we look at these two, and then I want to look at a question from your CBE platform today, right? Related to balance scorecard. Right now, if you could not join the class on last Thursday, go through that recording, because in the last so I did the class from morning itself, but I asked you all to join at around 2:30. Go through that recording because we discussed very, very important questions, two questions that day: balance scorecard and building block model. I want to look at another balance scorecard question today after looking at these two, right? Okay, people, I have shared the handout, revision day 2, right? Okay, I'll give you 20 minutes. 20 minutes, people. Do the working on Excel. The first question is CTD. This is a practice question on transfer pricing. The question, you can look at it from your computer screen. Don't look at the TV, right? I have shared the handout on the group. Download it. Start doing it, right? Because these questions are going to take some time, people. Okay. 3 questions. We are going to answer the first one, CTD. Look at the requirement and then start. Look at the requirement. Didn't bring your computer. Forgot. You have to do things on the computer now, right? Have to. Okay, part A, guys, right? Just to clarify something, calculate bonus each divisional manager would receive. Yeah, calculate bonus. So for you to calculate bonus, you have to find what? RI, residual income. See, divisional manager is awarded a bonus equal to 5% of his or her residual income. So you have to find RI. To find RI, you have to know your what? Controllable profit and your capital employed. So how do you find your controllable profit? Find your revenues. From the revenue, start deducting all the costs, right? The normal, profit statement. Yes, are we clear? See, under the current trans policy, calculate bonus. So 14 marks, huh? 14 marks. I think you have to show a separate column, for TM and another column for FD, and then find the, what do you call, net income. Find the profit of each division. Please do that. Start doing it. So open your Excel, name your Excel sheet as CTD, and then start showing things. Start with sales. Sales, one division is selling to the other division and also external. Are we clear? Identify those things, people. Right? Quick. Please look at the question from your computer. Right? So I'm done. You didn't bring your computer. Yeah, read the question, Amsa. Read the question. I'm not going to help you out because, no point. If I tell you everything, then no point, right? That's the target ROI. Target ROI. So you have to find your ROI. You have not read the question properly, right? Please read the question properly and then start doing the working. Do it fast, bro. Yes. Yep. Transfer pricing is linked to divisional performance because you're looking at two divisions. That's what. Okay, I've put the question on the, the groups. I have shared the question on the groups. Sastri, do me a favor. Can you put the questions on the Candy PM group, please? All right. Loading. Okay. We'll start doing it, people. See. It's not going to some straight because here the initial bits are very easy ones. Right? Start putting the values. Right? Do the multiplication on Excel. I'm asking you to identify the what do you call question here, right? Who's transferring to who, the same price and all that. Then you do the work in the computer, right? People, I know it's difficult, but you have to get used to it. Brilliant. Some people have, well, some people have already done that question, na? Good, good, good. Okay, 10 more minutes and then I look at the 5 more minutes and then I do the discussion. Now, internal sales. You don't have to worry about, fixed administration in the context of internal sales. It's just a cost that is there in that particular division. So you need to deduct it, right? Internal sales and fixed administration overheads are two different things, no? Two different things. Yes, they don't tell you that these costs are uncontrollable. They don't tell you that. So that means all costs are controllable by the manager. Are we clear? Yes. So on Thursday, last Saturday, I'm sorry, we looked at that ROI question. There we came across costs which could not be controlled by the manager. Here they don't tell you that you have to deduct everything, all the costs, everything.
Like normal capacity or maximum production.
Okay, you figure it out.
I didn't take it low.
Yeah, normal, exactly. See,
Yeah.
absorbed on the basis of normal capacity.
Okay.
Fixed overheads. Yeah, you had to deduct all the controllable costs, right, Sastri? All the controllable costs, everything. Yes, I think it's better to define them. If you are using acronyms, DMDL, direct material, direct labor, better to define them somewhere. Yes, then you can use it. Now, usually, Sasri, if a cost is not controllable, they tell you that. right? For example, if that fixed cost is allocated by the head office, they tell you that, right? Then you don't take that into consideration if they tell you that cost is coming from the head office. If they don't tell you that, then you take it. Okay, people, let's look at this now. I think I've given enough time. Right, you're looking at two divisions, people. They tell you a lot of things. Who cares? You just need to, identify the key information. There you go. I've highlighted the key information. So you have two divisions. FD, right, have a limited external demand and are also transferred to TM division. People, the key to answering transfer pricing questions. You have to do a small what? Working. Preferably in your scratch paper, in your rough notes. Quickly do this so that you see things. The examiner doesn't want to see this. Right. So FD is transferring to TD. FD is also selling externally. See, limited external demand. That's why I said limited external sales. Right. TM division uses moldings, blah, blah, blah. TM, there you go. TX sold externally. So the other division is selling externally. Yeah, see, is selling externally. So you need to see these key information, people, not everything. Look at it. In a question, there'll be so much of unnecessary stuff, right? Look for the key details, right? You have to practice your mind in that way. Guys, you're going to get it, with time. You need to look at more and more questions, right? So your manager is evaluated individually based on what? RI, not ROI, RI. Cost of capital 12%. So there is a target RI. What is that? I'm sure it's given. Divisional manager is awarded a bonus equal to 5% of her residual income if the target RI is achieved. So there is a reward as well. That is great. Okay. People, there you go. So once you identify the party who's selling to the other internal party, then the question becomes easy, right? Rather than looking at, selling price, variable cost, I want you to focus on the capacity where they talk about units. Now, who's selling to whom? FD is selling to TD. So TD can't sell if FD doesn't sell. Are we clear? So look at TD, right? TD is selling how much? 15. For them to sell 15, they have to get 15 from FD. Things like that should click. Are we clear? Right. So here they tell you that. But before, reading that part, things like that should click in your mind. See, you're looking at sales to external customers 15,000, maximum capacity, normal capacity, both are 50. You look at FD, maximum capacity 25, normal capacity 20, sales to external only 5. So they wouldn't produce 25,000. They wouldn't operate at maximum capacity. Why is that? Because internally they have to transfer 15 and externally they have to sell only 5. So both together 20. They have a capacity of 25, but they wouldn't go up until 25. Are we clear? Right. Capital employed, target RI. People, now here they are highlighting certain things. Right. 366. What is that? Variable production cost of TX. Right. This is this division. TD, the one who's selling only external. They tell you this 366 includes the cost of an FD molding. So the transfer price is there in this 366. That is what they're telling. Are we clear? Transfer price is there in this 366. So FD is selling to TM. So TM is paying something. That payment is there in that 366. Are we clear? Right, good. External sales only incur variable selling and distribution cost of 4. Right. So this 4 is applicable only to how many units? 5,000. Very good. No. Yes. They are selling externally only 5,000. Very good. This 4 is applicable only to those external 5,000 units. Are we clear? Are we clear? Yes. Right. Brilliant. Now, people, now I walked you through the requirement. So you ought to calculate bonus, right? You have to calculate bonus. So for you to calculate bonus, you have to find the profit firstly, right? Okay. Another point that I want to highlight. People, do they tell you any of these costs are not controllable by the manager? They don't tell you that, right? So you have to assume all costs can be controlled by the manager. In the previous question that we looked at last week, they said head office cost is this much. Head office depreciation is this much. You can't control those. Here, nothing like that. So you deduct all the expenditures when you calculate your profit. Are we clear? Right. People, ideally, your answer should look like this. Ideally. There you go. Now, I saw some of you doing the working, the multiplication in your rough paper. Don't do that. Show the multiplication like this, or even, if actually this is not necessary. This is not necessary. You can simply say 5,000 into what's the external selling price? 40, no? What was it? 80. 5,000 into 80. There you go. So you don't have to show this at all. The examiner can click on this and see what you have done. Formula bar. 5,000 into 80. People, are we clear? Right. So because you have external sales and internal sales, better to show them separately. Better. Right? Don't show everything together. Are we clear? Right. So FD is selling how much? 5,000 externally. That's why 400. TM is selling 15,000 at 500. The selling price is, there you go, 500. Done. And then sales internally. So what is the transfer price? I calculated the transfer price here itself, people, right? So they tell you transfer price is equal to total cost. There you go. Total production cost plus 10%. Are we clear? So transfer price is set by whom? FD. FD is the one who's selling. So they have to set the transfer price. So you have to look at data of FD. They tell you total production cost plus 10%. Right. Production costs. Variable, fixed both. Production. Now, here see, variable production, fixed production. Are we clear, boys? So total production cost 60. At 10%, that's 6. Transfer price is 66. Are we clear? That's your transfer price. Are we clear? Fixed administration, no. Now, fixed administration, I'm getting all kinds of questions, people. Now, in a division, you have to have an admin function, no? If it's a large division, can you remember how I explained, these, what do you call, the transfer pricing fundamentals? I took Unilever. I took what? Kiehl's. I took Kiehl's as the parent, and then Elephant House and Kiehl's supermarkets as my, divisions. People, they are companies. They are not just two, measly divisions. They are big ass companies. Those companies, they have their own admin. Do you get it? Do you get it, people? Please don't operate in the assumption that administration costs are straight away coming from the head office. No, no, no. These divisions, they have their own admin cost. Are we clear? Amjad, you can't operate under those assumptions. Are we clear? These are big divisions. Now, when we say divisions, guys, your mind automatically goes to like a small area in a big company, HR department. No, no. I'm talking big companies. Unilever, Sri Lanka. That's a division. Division of what? Unilever, United States. Nestle. Nestle Sri Lanka is a division of what? Nestle in Netherlands. Parent company. Are we clear, guys? Right, good. This is your profit statement, guys. Are we clear? Check your answers. Check your answers. Check your answers. This is very easy, guys. I'm not going to take a long time to explain this. Come again? Yes. Now, okay. So, you have production costs variable and also production costs fixed, right, guys? Now, if you look at the statement that they are giving you, right? So you have variable, fixed, variable selling, fixed admin. Everything is there, right? Okay. So this 4, right? This 4 is arisen by whom? FD, definitely. When selling which units? Internal units or external units? External. So 4 into 5,000, 20,000. That is your selling and distribution cost of FD. Are we clear? Right. Please look at this. Please look at this. Now you have to do the dissection in this way. See, I'm done. 5,000 into 4. And then here they tell you selling and distribution is 25 something. Selling and distribution, there you go, 25. See, 25. People, now when you show divisional performance, better to, better to separate things, better to show variable costs separately, better to show fixed costs separately. Are we clear? Look at my statement. Firstly, I show my sales, right? I show my sales. There you go.
So how did the total is 400,000 plus 990,000?
This is 400. Yes, sorry.
Yeah. So it should be.
No. I have taken. I think I have left the 3 zeros out. Yeah. I left the 3 zeros out.
But still, it's wrong. I think sales in total is 900.
Yeah, this is 99. Yeah.
130.
Yeah.
Okay.
Right.
And
Yes. Check your answers, people. Check your answers. I have taken everything into consideration. Everything. Why is that? Because they tell me that they don't tell me that these costs are uncontrollable. Are we clear? 5,000 into 4. 15,000 into 25. Guys, by the way, this is FD, yeah? This is FD and this is TM.
So, production variable 15,000 times 366.
Yeah.
Is it fixed or no?
15,000, that's your internal transfers, no?
Yeah.
No.
So that's
Yeah, so TM is buying. See, TM has to buy from FD and variable production. That transfer cost is included in this 366. So
yeah, so it should be 300.
no, because transfer price is also a variable cost, right? It's also a variable cost. Do you get that? Because every unit you sell, you have to buy the unit from the other division. So it's a variable cost. Are we clear? Right? So see, I found the contribution after deducting all my costs. And then I found my net profit. Net profit is 90 and 360 people. I get 90 and 360. Right? Okay. Now can we do the rest? The rest is very important. Guys, now this part is actually very simple. Profit statement, that's nothing. Right? Can we do the working from this point onwards? So they tell you capital cost is how much? 12%. Right. Look at the capital amounts. Right. So 1,500 for TM and 750 for FD. So 1,500 into 12%, 750 into 12%, right? There you go. Right. So there you go, people. Capital charge 90, capital charge 180. So my RI, there you go, people. My RI for FD is 0 and for TM it's 180. Are we clear? There you go. People, I hope you can remember what RI indicates. Excess return, exactly. RI is the excess return to shareholders. People, so what is the return demanded by TM division? Yeah, return demanded 180. This is capital into cost of capital. This is how much they demand, 180. But the division is actually generating 360. So 180 is the excess return. Are we clear, people? Here, capital charge is 90, meaning shareholders want 90. Net profit is also 90. So it's not bad. People, if your RI is excess, target RI is 85. Now, here you're meeting shareholders' expectations. That is what you need to understand. Shareholders want 90. You're making 90 for them, but you're not achieving the target. Target is set by the company. No? Are we clear? People, as long as your RI is not negative, you're fine. Are we clear, boys and girls? Yes. Online people, are we clear? Good. Right. Now, this part is very easy, guys. This is very, very easy. Now, I see a lot of information in all the transfer pricing questions, people. A lot of information. Now, if you look at this part of the case study where they talk about moldings, agricultural, who cares? Your eye has to detect the key information. In the other question that we are going to answer today, again, you will see a lot of unnecessary crap. Train your eye to avoid those and train your eyes to detect what key information. Are we clear? That's why I always say look at the requirement. Our divisional manager, right? Okay, this is transfer pricing. Okay, you have to identify who's selling to who. Once you identify that, you look at the units. That's it. Then the rest becomes very easy. Are we clear, people? Right. Okay, people. So we are done with the profit statement. Implications of the current evaluation system that may have for each division and for the company as a whole. What do you think? Now, I want your opinion. Just tell me what you think. No need to look at the answers, right? There you go, people. This is what you need to look at, right? This is what you need to look at. So you compare your RI with, you compare your RI with the target RI, right? What can you say? Who's going to get demotivated? Who's going to get motivated? Which divisional manager is going to get motivated? Amda? FD, definitely. Why is that? See, 180 target ROI has been only 105. So you're achieving how much? 85 more, 85 X's. He's getting his bonus. Are we clear? When he gets his bonus, he's very motivated. Right? What about the other division people? What about, it's TM that is getting motivated. No, TM. I'm sorry. It's TM. TM. Yes. My bad, Sastri. TM. FD is thoroughly discouraged. Thoroughly. What's going to happen? What's going to happen? You tell me, guys. You're the FD manager. What is going to happen? Please look at the data in the question. Look at the data. Look at the data. What is your external selling price? Your external selling price is 80. Internal transfer price is only 66. FD manager, right? Because of this whole scenario, FD manager is going to say, look here, I don't want to supply to TM. I can sell it in the market and get a higher revenue. Because of you, I'm not getting my bonus. He can say that. And it's very fair that he says that. Guys, that's what your examiner wants you to write. Are we clear? Are we clear? Implications, no? They want you to talk about implications. Because of the current transfer pricing policy, TM manager is very happy. He's having the time of his life, getting his bonus, nice. FD manager, miserable, right? He's miserable. He's looking here and there and he's thinking, because of that idiot only, I'm not getting my bonus. So he's going to make an argument. Look here, you buy externally, let me sell only to my external customers. Are we clear, people? Okay, what about now that's your individual performance analysis, right? Dysfunctional, well, now it's not dysfunctional behavior. Dysfunctional behavior is you becoming, selfish. You becoming selfish. It's not that here. You don't see dysfunctional, you don't have the dysfunctional behavior here. Are we clear? Right? Not in this scenario. Now, what can we say about the company as a whole? What can we say about the company as a whole, people? Company as a whole? Yeah. FD division.
Sometimes they might pay higher value. So, in that the loss.
Limited demand is there for FD, not TM, no? Not TM. Guys, what you need to say is company's performance, the head office is going to get complaints now. Why? FD manager is going to complain. Look here, I'm not getting my bonus because of the other division. Let me sell only to my external customers. Because if I sell to my external customers, then I can charge 80. But when I sell internally, I'm charging only 66. No, FD can, no. Yeah, true. At least for that. At least for that. Wait. FD doesn't have limited demand, right? Oh, right, yeah. FD has limited external demand, limited external market. Yes. So, right. I get your point now. So, FD can sell only 5,000. That's it. Even if they want to sell more, they can't. So, their only option is to sell to the other division. Right, okay. So, what can we say? Good. FD's market is limited. Yes, correct. I hear you guys. Yes. So, what can we do? Make a small recommendation. Now, he's demotivated. No, we have to do something for him. What? We can say, look here. We can exactly. The only this thing is to increase the transfer price. What else? What else can be done? That's it. That's what you need to say. People, are we clear? Increase the price. Very good, Afsar. Yes. Increase the transfer price. Make a small recommendation like that and then move on. Are we clear? Good. People, you need to talk about the fact that TM can't operate without FD. TM manager is having the time of his life, but he's enjoying because of FD only. Because if FD doesn't transfer, then TM is screwed. Are we clear? Make a point of that as well. Are we clear? Yeah. Yes. Yeah, you could say that here. Any implications? Yes, implications. You need to say manager of FD is demotivated, manager of TM highly motivated because of the RI. So you can't let one manager get demotivated. You can't let that happen. Do you get it? RI is a solid measure, but you can't let that happen. Are we clear, people? Right. Can we do part B now? Part B. People, maximum transfer price. Both divisional managers want to achieve their respective residual income targets. So they both want to achieve their target ROI. Right. What are their target ROIs? 85 and 105. What can we do, people? Now, can you remember in transfer pricing lesson, in that lesson, we had an equation for maximum, minimum. You can't use them here. That's the point. You can't use them. Why? Okay, I'll tell you why. Because they tell you they want to achieve their respective residual income targets. That's why you can't use that. Minimum price, we had an equation, variable cost plus opportunity cost. Maximum price, it was lower of what, net marginal revenue and something, I can't remember. You can't use the equations, people. You cannot use equations. So what can we do? You can't use equations. Right. I'm going to show you something. Right? Then you tell me the answer. See? You can't use equations. No. So you have PM, you have FT. Right. Their RI, PM is 185, no? And here, no, RI. 185, no? 180. FD's RI is 0. Right. Target ROI, sorry, target RI. Target RI is 105. This is 85. People, so these people have an excess RI of how much? 85. 75, yeah. These people have an excess RI of 75. Excess RI 75. They have a deficit RI, right? Deficit. So what do we need to do? What do we need to do? You tell me. Very good. Increase by how much? No. Okay, what do we need to do for TM, guys? TM, okay, forget TM. FD is easy. What do we need to do for FD? FD, increase transfer price by how much? 70? How do you get that number? No. Guys, what is the transfer price right now? Yes, I'm going to write that. Yeah, current transfer price. Current transfer price 66. Come on. You want what? Ah, yeah. Don't put to the corner, no? Right. Okay. So FD is selling how many units to TM? 15,000 people. 85 is the deficit. 85 is the deficit. Divide this by 15. What is this? How much is this? 5.66. People, if I increase my transfer price by 5.66, I'm going to get my target ROI. Do you get it? That's a yes. 5 point. How much is this? 71 point. If I increase my transfer price to 71, then I'm going to get my R. Same way, what can we do for TM? TM. Now, you have to balance it out now. What can we do for TM? Reduce. How much are they buying from? So now this is the transfer price that FD is going to like, right? I will highlight this and say TP preferred by FD. What about TM? Okay, let's see. 75 divided by 50. Correct. Thank you, Uncle. $5. So they are right now paying 66, right? So I'll do the current transfer price 66 plus this 571. Are we clear? Why not? Come again. Difference of what? 66? All right, okay. Yeah, there is a 0.66 difference. It should be 71 for TM. Yes. Now, the requirement, hold on, the maximum transfer price. Okay, minimum transfer price. Let me answer this. Minimum transfer price, FD manager, right? This is 71.66 people. Minimum transfer price is 71.66. Maximum transfer price. So TM will agree to pay a maximum of 71. There is a 0.66 difference. You ignore that. You ignore that. It's just a 0.66 difference. The point is, by doing this, both managers are going to achieve their target ROI, RI, and get their bonus. So both managers are going to be happy. You can't know. You can't use the equation. People, online guys, now what I want you to understand is you can't use that equation we looked at in class. Are we clear? Are we clear? Then yes, if they didn't have this, residual income, blah, 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 by law, then you could have, found it the normal way. Here, they want you to find the maximum minimum price condition. There is a condition that you have to, satisfy. Are we clear? Are we clear? This is a good question because this goes out of the syllabus. Maximum, minimum, you have to think. Do you get it? You start doing net marginal revenue, 0 marks. Right? Marginal cost plus opportunity cost, 0 marks. Do you get it, people? Are we clear? Very good. Now, someone talked about dysfunctional behavior. Dysfunctional behavior arises because of what? You become very selfish. You think about only your division. You don't think about the company as a whole. So you end up accepting bad projects or you end up rejecting good projects. Now, dysfunctional behavior arises with which measure, guys? RI or ROI? ROI, very good. Now, please understand that dysfunctional behavior doesn't arise with RI. Are we clear? Someone said the dysfunctional behavior, that's not a valid point. Are we clear? Right, good. Everyone okay with the question? Good, good. Take a 10-minute break. 10 minutes and then we look at a solid question again. 10 minutes. 10 minutes and then we look at another one. Yes.
I want to see that.
Yeah. Yeah. Why Hamda? Interested? Everything okay, Sibyl?
Yeah.
Guys, now don't get discouraged. Transfer pricing is, in my opinion, one of the most trickiest areas. Tricky. Okay, that's enough. Shall we do the next question? Right. Sifat, can we move on?
Yes, sir.
Online people, are we okay? Online people, are we okay? Afsa, Amjad, Ibra, Inshifa, all okay? Yusuf, shall we move on? Right. Okay. PGC, another transfer pricing question, people. Right? Start with the requirement. You have number of requirements here. Right? The bigger the question, the easier it is. Remember that. Right. Again, people, I'll walk you through the requirement. Under the current transfer pricing system, prepare a profit statement. Same thing as before. Profit for each division and for the company as a whole. Right. Your sales and costs should be split into external sales and interdivisional. We know that. That's the normal thing. They don't have to tell us that. We anyway do it. Right. Start with this, guys. Right. We'll do part B later. 9 marks. We'll do it quick. Do the working in your book. The one who's selling, the one who's buying. Right. Lot of unnecessary information there in this question, people. A lot of unnecessary information. Identify the buying, identify the selling, do it. Yes, this is a good question. Good question. Let's do it properly, right? as well, huh? Because profit statement for each division uh, and PGC as a whole. Now, earlier we didn't have to do it for the whole company. We showed only the profit for the two divisions. Here, we have to show it for both divisions and the company. A lot of information, but very basic. Everything is controllable, yes. They don't mention Do the analysis. If you're done with A, please do B as well. At least do the analysis, people. Who are done with party? Done with the- No, right now, it is to buy from the yeah. It part B, this is now changed. We can buy from outside. How many units do we buy from outside? 30,000. Find the extra cost of buying versus this is the scenario of eight versus 12.
We buy from name price.
Same price, but there is a
But they refuse to sell extra.
but now it's different. We can buy from outside. So you are getting me that we can buy from outside 30,000. That's correct. discuss the number of debtors which A should buy from A and the number of debtors which A should sell to external customers. Right? And your answer is correct. The justification. Right? It's the logical explanation. So you can say and 20,000 with age into 8%. So that's I want the analysis. But B is pretty straightforward. By 3 marks calculation. Straightforward. They look for the explanation. Now let's do this. I think I've given you enough time. Let's quickly look at this. Not very difficult, right? The question looks huge, but you understand, you clearly see that it's not a big deal. It's not very complicated, right? People, I've highlighted only the key data. I don't care about cars, batteries, who gives a damn, right? Your PGC, the company is split into 2 divisions, right? Division B, Division A, right? And then I quickly went through blah, blah, blah. I couldn't identify who was selling to who. I identified that in the last part. I was looking for that, right? Found it. B buys from A, meaning A is selling to B, right? Now, when I scan the information, people, I see division B is definitely they're selling to the external market, and A, when I look at A, see, A also is selling to external customers, right? Brilliant. There you go. I did my working. And then what do I look at? Capacity. Right? So B is buying from A. Maximum demand is 180. Annual production is 150. Right? Now for B to produce 150, they have to get 150 from A. Right? There you go. I looked at my capacity. They tell me total capacity is 350. There you go. I divided 350 into external and internal. External 200, internal 150. Done. This is it. Right. People, they tell you head office has a policy. What is the policy? B must buy from A. Now you tell me how many different types of divisions did we look at in PM? How many divisions were there? 4. Very good. 4 divisions. What were those 4 divisions? Cost divisions, revenue, profit, investment. Very good. What is the most distinguishing, most special feature of investment divisions? What is that? Yeah, they have all of them. They have revenue, cost, and the power to make investments. People, do you think in this case the managers have the freedom to do things? No. The manager's freedom is restricted. There is a head office policy. You have to adhere to that. I want to highlight that part. Are we clear? When we talk divisions, the divisional manager should have freedom. Here, it is there, but limited. Are we clear? Right. It's just a small point that I want to highlight. People, B is unhappy. Why? B can buy externally at the same price. How much? 30. Right. Last paragraph talks about head office agreeing to change the purchase policy. So head office is now allowing B to buy externally. That's a good thing, right? Part A, using current transfer pricing, prepare profit statement. Very, very basic. Yeah. Using current transfer price. There you go. Are we getting these values? Please check. Division A, sales external 3, 27. So total sales 4,090 and 27,000. Right. Costs, right. Variable, you have material, you have labor, and you have internal transfers. Now, earlier, Sifat, you asked me, sir, why can't we, show now in the previous question, transfer price was included in the variable cost. Here, not the case. Here, labor material is given separately. So you have to show the internal transfers separately. Are we clear? Are we clear, boys and girls? Here, we didn't show the internal transfers separately. See? It was just production. But here we are dissecting them. We are showing internal transfers separately. Are we clear? Total variable cost, please check your answers, guys. 2,650, 13,950. Check your answers. Or am I wrong? Two 650, 13950, contribution 2,300, and contribution 13,050. Are we getting these values, people? Check your values. Check your values, please. If you have any doubts, please ask. No, it's not okay. You have to show them separately because they are showing them separately to you. Are we clear? So you have to separate them. Internal transfers 18,000 into, yes. Yeah, correct. Internal transfers, yes, 150 into 30, correct. 180, not 180. Amjad, it's 150. 150, right? Because in the question, they clearly tell you that they are selling only, see, if you look at the capacity, 150 from here only. See, you have not read the information, properly. Maximum annual demand, how much? Maximum annual demand for by external customers 200, right? So if you are selling 200 to external, then you can't sell 180 to internal. You can sell only 150. Are we clear? That's how we get 150. Understood? Right. Moving on. Asmid, are we okay with the values? Contribution? Right. Profit 107,590 something. Good.
590
B. Correct, no? And then the total. No, no, no. Yes, this I can put on the group. These are my crude workings. Yes, I can share this. Yeah, not an issue. I can put this on the. Are we clear, guys? Easy 9 months. Yeah. What's up? Please ask.
There is there, right?
Internal sales. Yeah.
Even for
Sorry. Internal. There you go. So B has to pay no payments to A. Here internal sales. There you go. 115 to division A. A is selling B. A is selling to B. Correct? Okay, again. Guys, you don't have to show the multiplication. You can, use your Excel functions. I want to show because it's more clear. Please don't show your answers in this way. It's a waste of time. Waste of time. Whenever you have an equation, something like that to use, don't show the equation. Just straight away, plug the values in. They'll look at whether whether you're using the equation correctly or not. Right. Okay, now, so we are done with part A, easy 9 months. Part B, I'll do the analysis. Part B, assuming new group purchasing policy will ensure optimization of group profits. What the hell is that? Optimization of group profits. Calculate and discuss number of adapters which B should buy from A and number of adapters A should sell to external customers. Right, people, now we have to do a small analysis. 30,000 is the correct answer. That's definitely correct, but it's 6 marks, no? So you have to show certain things. Are we clear? Let me tell you. Right, no big deal. I can show things clearly using this. Right. Okay, I'll take division A. A is the one who's selling. A is the one who's selling to B. Right. A. Division A. Division. Sorry about that, guys. A has a capacity. Stupid mind. Sorry about that. A has a total capacity of 350. No? Total capacity 350. Now this is how you show the analysis to the examiner. Total capacity 350. External demand is how much? Maximum external demand is 200. So internal supplies, internal sales ideally must be 150. Internal sales must be ideally 150. Right. People, what is the total capacity of division B? Total capacity 180, correct. Total capacity of division B is 180. There you go. See, annual demand, right? Total capacity external demand is also 180. 180. Right. Now, internal sales from A, internal sales from A is 150. So therefore, that means they have to buy from outside how much? 30,000. Buy from outside 30. Right. Now this is pretty clear, guys. This is very, very clear. I mean, you see this. This is not a difficult calculation. Now we have to justify. How to justify? People, right. What is this? Right. People, when you buy from outside, when B buys from outside, when B buys from outside, what is the extra cost? When B buys from outside, extra cost arisen, extra cost borne. Can you get me this? When B buys from outside, extra cost borne. I'll show you information. Okay, please write this. No. No, I'm guys. That's what you can't just compare the transfer price. No, so when B is buying from outside, extra cost. Now, what was the price which was paid to A? 30. Right. No, price paid to A. So B is buying from A, right? Now we say B is going to buy from outside. Price paid to A, it was 13, right? 13. What was the cost of producing this unit to A? What was the cost? So A is the one who's producing this now. What is the cost? Okay, Asmed is saying 7 plus what? What's 1? No, additional cost is borne only when you sell outside, no? So 1 is not borne when you, so how much? 7. No, are you clear? Yes, people, are we clear? Boys and girls joining online, people, when B buys from outside, right, the extra cost borne by the entire group. So I'm going to say minus cost of, I can say variable costs, minus variable cost borne by A in producing the unit. This is how much? 7. Right, people, what is the extra cost borne? There you go. This is how you find the extra cost. You can't just compare the two transfer prices. No. Do you get it? People, this is make versus buy. You're looking at a make versus buy scenario. Are we clear? Extra cost of buying from outside. Company as a whole, yes. You can't be thinking about the two divisions here. Extra cost of buying from outside is therefore 6, no? Right. Now, if B has to buy from outside, the group has to bear how much extra cost? 6 for every 1 unit. Are we clear, no? Are we clear? Boys and girls, are we clear? Okay. Someone is asking, why not include fixed cost? Can someone answer that, please? Fixed cost is anyway fixed. Whether you produce, whether you don't produce, it's anyway going to be there. So you don't take it into account. In other words, fixed cost is not relevant. Very good, Dasman. Not relevant. Very good. That's why we don't take the fixed cost. Fixed cost is anyway going to be there. Good question. Right. Right. Now, hold on. When, write this guys, when A produces for B, what is the opportunity cost? Opportunity cost borne by, we'll say borne. Can someone tell me the opportunity cost if A produces for B? How do you find opportunity cost? Please look at your equations. How do you find the opportunity cost? Now, if A continues to produce to B, what is the opportunity cost? People, what is the external selling price? No, I'm not, I don't want the profit. I don't want the profit. Okay, 15 is the external selling price. I'll start with that. External selling price of A. External selling price of A is 8. Sorry, 15. What is the cost of producing? Very good, right. Variable cost of producing. Variable cost of producing to A. How much? 7. People, what is the opportunity cost? This is your opportunity cost. Opportunity cost if A produces to B, opportunity cost 8. Now you tell me, people, whether we should buy from outside or whether we should make this in-house. What do you think? Why is that? Very good. Guys, do you see that here, more than a transfer pricing, scenario, it's a make versus buy. No, are you clear? Guys, they tell you the group is now changing the purchasing policy. So we can clearly see that B has to buy from outside 30. But if A continues to produce to B, then there is going to be opportunity cost. We have to bring that into account. We have to consider that. If A produces to B, then A is going to lose 8. The group as a whole is going to lose 8. But if we buy from outside, then group as a whole is going to lose only 6. Yes.
But the maximum minimum external demand would be
Correct. Now, very good. That's another question I was expecting. Husband, now please understand. B actually wants how much? B wants 180. Right? B wants 180. Let me write that. B wants 180. Now I'm going to divide this 180 into 2. They're getting 150 from A. Getting 150 from A. 30, getting 30 is the problem, no? Ask my Davik, getting 30 is the problem. Here you have two options. What are the two options? Either you can get it from A or from outside. Two options here. Get it from A or get it from outside. Get it from outside. Asme, do you understand that I am comparing actually these two? That's what I'm doing in this scenario. That's what I'm doing. Only for that 30,000. Very good. Are we clear, boys and girls? Good question. I was waiting for that. I think you have this thing, eye infection. Your sinus. No, are we clear? You look confused. That A is born only when you sell outside. No? See, A incurs a variable cost when they sell externally. Oh my goodness. So we have to at the variable cost here, no? It should be, yes, no point. I forgot that variable cost. Variable cost of producing to A and thank you, Noah. Yes, I missed that. And variable cost of selling. Guys, don't forget we have for A, there is a variable cost of selling. PC of selling. 7 plus. So it's actually 8. Still the answer is the same. People, if you don't identify this, right? Where is it? Where did I do the? This is, you won't be able to score like a very high mark, right? For that 30,000, you get maximum 3 marks. For that 30,000 units, maximum mark allocation 3. The rest is allocated for this, guys. You showing this. This is the problem. This 30 is the problem. 30, we have two options. Get it from A or get it from outside. So when you get it from A, extra cost is 6. Extra cost extra cost 6. Get it from outside, my goodness, you lose contribution. Loss of contribution 7. There you go. So you go with buy from outside. So this is a make versus buy scenario. Do you get it? Huh? Yeah, after this, you just need to explain this. Boys, now, if you show this working, you're looking at 4 to 5 marks. If you show this, 4 to 5. The working. No. For this, maximum 3. If you show this part, look here, B has to definitely buy from outside. And you show this, you get full marks. If you don't show this, you lose 3 marks. This is the crux. Any idiot can see this. Anyone can see this. Are we clear, boys and girls? Anyone who's not clear? Yeah, this is what we are comparing. So the problem is getting that 30 because they want to sell 180. Yeah, go. Because now you have two options, right? To get your 30, there are two options. You can get it from outside or get it from the internal party. Which do you go for? For that only we do this calculation, right? So if we buy from inside, then you lose 7. If you buy from outside, you lose only 6. Are we clear? Right. Very good, very good. Get it from A, loss contribution is 7. There you go. Loss contribution is 7. There you go. Are we clear? Wait. Are we clear? So we have to buy from outside. You show this and say clearly from the above analysis, we can see that by buying from inside, the group has to bear a high cost. Therefore, we should definitely buy from outside. Buy how many? 30. 150 they anyway get. Are we clear? Something like this should be. Last class Excel sheet is, I don't have that Excel sheet with me right now, but this, yes, I'll put it. I'll put this for sure. Can we calculate the minimum transfer price, people? That is easy. This is the normal equation. 5 marks. Assume now no external supplier exists for delivery. No external supplier. So B can't buy from outside. What should be the minimum transfer price? Minimum. How do you calculate the minimum transfer price? Variable cost plus opportunity cost. How much is it? You know the values? Yes. Minimum transfer price. Wait, guys, hold on. Is it 14? Minimum transfer price per unit. Minimum. Right. Minimum transfer price per unit. So now B can't buy from outside. B doesn't have an external supplier. B has to buy from A. Right. So if B has to buy from A, B does not have an external supplier. External supplier. Meaning B must buy from A. B must buy that 30,000 from A. 30,000 units. So altogether 180. 30,000 units from A. We know minimum transfer price. Minimum transfer price, we know the equation. Opportunity cost plus variable costs. Right. What is the variable cost? We will find the variable cost. Variable cost to A. Variable cost to A, because A is the one who's supplying. A. 7. Labor costs. Material 3. Labor cost 4. Seven. Opportunity cost. Opportunity cost to A. Opportunity cost. It's not 8, no? External selling price is 15. Yeah, no? So now you're not going to sell to outside party, you're going to sell to inside. So when you sell inside, you're going to lose how much profit? Yeah, these are anyway incurred. The selling cost. Wait, do we?
If we sell for external,
We should take that into account, yes. If we sell externally, then that external, yes, correct. Same answer as before only. It's 7, no? Opportunity cost is 7. Minimum transfer price is 40. Now you have to explain. When A has no option but to sell that 30,000 extra units to A, to B, A loses out on contribution from external sales. Right? When A has no option but to sell that 30,000 extra units to B, A loses out on contribution from external sales. Show that, people. Show the working. 15 minus variable cost is 3. Material costs, yes. And then it's not 8. Yeah, variable cost of production. Yes, correct. People, so you have to, I'm sure you can do the explanation. Yeah, um, so here you have to stress the point that A has no option now, right? So A will have to charge this. A will have to charge this. So I've talked about the opportunity cost. Let's say the cost of producing a unit, cost of producing a unit is 4 plus 3 to A. Therefore, A will demand at least a price of 14 from B for the 30,000 units. Currently it's 13, no? Yeah, so you demand, currently it's 13. Where is the current transfer price? Yeah, 13. Yes, that's okay. That's fine. Current price 13. How did they say how they derive that? No. That's okay. This is your answer. Don't worry about that. So you're charging $1 more. You're charging $1 more. Current transfer price is 13. Are we clear, people? No? All good. Online people, are we okay? Right. Okay, a quick break and then we look at how long? 20 minutes. All right, okay. Okay, 20 minutes and then we start balance scorecard. We look at another question on balance scorecard. Okay, log into your MyACC account, people. Log into your MyACC account. We'll do this on log into your my ACC account. Huh? Yeah, practice platform. We'll do it on that. Use your platform, my ACC. I'll tell you the paper. Okay.
So we have to choose the country. Which country?
Come again?
We have to choose the country.
Okay, so you, what do you mean country?
I don't know. There is a.
So you,
Should I choose the one where?
yeah, I actually have no idea about that. Just, click on something and see. It's just, I'm asking you to log into your my ACC. That's all.
Going to the CV.
Yeah, okay. So then select your country, the where, place you're residing right now, the country you're residing right now, and try to log in. My ACC, yeah. Let's do this on my. Yeah. March, June 2021. March, June 2021. Right? You go to your CBE platform and then select PM, right? You select ACC official resources. In that past paper exam library, and then you select March, June 2021. March, June 2021. Right. Okay. Found the paper, people? March, June 2021. In that, so you only get what? Section C questions, right? In that, question number 4. Question number 4. Go to question number 4. go to question number 4. It's a question on balance scorecard. Found it? Loading. Okay. Right. Right. Easy, yes. Can do, can do. For sure, for sure. I need a rank, definitely, from this class. Right? I need one. You guys owe me one. Let me tell you, let me put it that way. Right. Are we done, people? Can we look at the question? Right. This is again PM March, June 2021. Old paper, right? Not that old. People, you're looking at what? There you go. You're looking at a balance scorecard, right? See, financial, customer, internal business, learning and growth. People, I cannot stress enough the importance of performance models. We have two models, yes, building block and balance book. There is another, it's not a model, it's a framework. You can call it a model. There's another model. I want to look at that later. What is that? 3E, value for money. There is a question from value for money, in your past papers. I want to look at that. Section C. They always test these models, performance metrics in section C, people. Are we clear? Right. So you don't have to read the requirement. I'm sure you guys understand. Okay, so they want you to identify a critical success factor for each perspective in the balance scorecard. Come up with a KPI and then also calculate and, I don't know, talk about it. Performance analysis. Right. For 16 marks, let's look at the requirement. What is the requirement? Please look at it from your computer. For each perspective, select one appropriate critical success factor which relates to the perspective. Suggest one key performance indicator, meaning you have to come up with a metric, a ratio, which will help to measure the critical success factor and use KPI to analyze performance from 2006 to 2008. So we are looking at 2 years. 2 years. Right. Please start reading the question so you can clearly see. I don't have to show you these people. Yes, you can highlight, do all that. Your answers, yes. My advice, don't use a scratch pad that is given by the platform. Just use your rough notes, right? If you want to take things down. Are we clear? Guys, in the exam, you can highlight these information, yeah? Can do that, no? I don't think I can do that. No, I can't. From your laptop, can you do it? Like, highlight things. Please do it. Get used to it. Are we clear? Right. Start reading the question, please. People, I want you to understand something. Balance scorecard is mainly used in the context of manufacturing companies, but here, balance scorecard is used for a charity. Do you see that? Now, the question that we discussed on balance scorecard, it was survey. No, that was built in law. We did the balance scorecard for a university. What was it? That question? People's Bank. Yeah. Profit making organization. Again, service provider. Here, balance scorecard is used in the context of a charity. Are we clear?
Okay, different question for same. Okay,
What? What is it?
text for
Yeah, Medcom. This is question number 3. Question number 4. I'm sorry. Question number 4. Correct? There are 2 section C questions. No, this is the second one. Question number 4, Noah. My goodness. People, the critical success factors are given. Go to the end of the question. They're given. That makes it more easy. Okay, do it fast. Yes, it's fine, but it's completely fine. Yes, show the division. So the KPI has to be a equation, right? Oh, it's a percentage. That's fine. You show it, you interpret it, move on. Woke. So easy. Noah found the question, right? Amjad, now when you define the equation, you know, you can show the equation, and I think it's better if you can give like a small explanation. Small explanation. Quick people. we do calculations inside the performance evaluation? Yes, definitely. That's where you have to show the calculation. Yes, the analysis must be shown in the in this particular area, no?
For the calculation, we discuss.
Yeah, yeah, definitely. Definitely, yes. Focus on why and how. Why you're looking at a higher percentage, why you're looking at a higher value, and how. Don't just say, okay, it has increased. No, no. Start with why. This has increased because of this, because of that. Could be because of like that. I want to see why and how, not just increasing, decreasing. No, no. Depends on the question answer. Sometimes they give you the CC critical success factors. Sometimes you'll have to figure it out. Now, the two questions that we looked at so far, it was given. No, sometimes you'll have to figure it out. Right? I can't say, look here, you will get the CSF for sure. No. Do you get the answer like automatically when you put the equal sign? Yeah, no. I got the answer. Ah, this is correct. Percentages. I didn't calculate it. It just came. See, do you can you do that? I think that's how you. It doesn't. I don't know. Maybe it's because of that. You don't get it, no? Are you sure? Like space it out and see. It doesn't work. Huh? Ah, damn it. Yeah. So we'll say 2006 is. We'll say 8, 7, and 6. Yeah, this is can't see it because I copied and pasted now. Are we are we done? Finished. Pretty basic. Functional efficiency. Pretty basic, right? This question is a no-brainer question. No-brainer. Everything is nicely laid out for you, right? You just need to come up with a solid answer. Are we clear? People, you can clearly see that your critical success factors are positive cash flow, innovation, medical effectiveness, and functional efficiency. Now you have to divide these critical success factors among the four perspectives. Positive cash flow definitely comes under financial. Innovation definitely comes under learning and growth. Medical effectiveness, you're looking at the patient, so therefore customer. Functional efficiency, internal business, right? People, the data is very, very concise, very, very clear, right? So based on this, you have to come up with a KPI, key performance indicator, right? People, the critical success factor is positive cash flow. So how to measure that? How to measure your positive cash flow? Easy. You minus your operating expenditure from the donations. There you go. That's your KPI. So here I'm explaining, look here, this can be calculated by deducting total operating costs from total donations. You don't have to write that. If you just show the equation also, it would be enough, right? Then performance analysis is the key thing, right? You have to show it for all 3 years, right? That's not it, people. Now, for example, here you can clearly see that the positive cash flow is going well. In the most recent year, it has become negative. So objective is not being achieved, right? See, objective is not being achieved in the most recent year, right? Now, let's talk why and how. What's happening? There is a steady increase, people, even though you're not achieving your objective, right? Do you see that your donation size is increasing? Size of the donation by each of these businesses. So they are getting donations from businesses. Huh? So it's increasing. People, I am showing that here. However, there is a steady increase in the size of the donation year on year. So I see a 7% increase from 2006 to 2007. 7% increase as in from 500 to 535. That's a 7% increase. Check your answer. Now you know how to get the increase, quickly, right? You don't take the difference, you divide the most recent value by the previous value. 535 divided by 500, you get 7%. 1.07 minus 1. So it's 7%. Are we clear? So there is a steady increase in the size of the donation. What has happened is your donations have reduced by 5% again, people, right? By 5% again. So see, number of donations is coming down from 3,000 to 2,850. So that's a 5% decline, 5% decrease. Are we clear? Again, how do you calculate that? 2,850 divided by 3,000 and then divided, and then you take the difference, you see that it's only 5%. Right. Now people argue, what can they do? But you're not looking at a lot of information. So don't try to, talk about economy. Look here, businesses could be, underperforming. Don't write all that. Right? Try to stay within the boundaries of the question. Let's come up with a small recommendation. What can we do? People, they're approaching only large businesses. Yeah. See, financial donations are sourced from large businesses. We can say, why not medium sized? Approach them. People, your operation costs are going up, right? Obviously, why are your operating costs going up? Exactly, you're performing how many treatments? Right, from 4,600 treatments to now 5,600. It's no surprise that your operating costs are going. So your donations are not keeping up to it. So what can we do? Approach other businesses. Say that. Are we clear? So guys, now positive cash flow here, objective, blah, blah, blah. Here you have to say, look here, this is not a big deal. It's not a big deal. Objective is not being achieved. This is mainly because the number of operations, the number of treatments from 2006 to 2008 has has increased significantly. Significantly. By how much? Get me the get me the percentage difference. So 5,600 divided by 4,600. 21%. My goodness. 21.7. So that's 22%. It's a 22% increase, people. This is mainly because number of treatments has increased significantly. As a result, you know what? That's enough. 22%. Thus, operating costs have increased, but number of donations have not been up to, not been adequate. Something. People argue back and forth. Okay. But we see a steady increase in the size of the donation. Brilliant. From 500 to 600. That's a sizable increase. Right? So I'm just like, this is a summary, people. This is a summary. Now, if you have written other points, completely fine. Are we clear? As long as they're practical, you get marks. There's no right or wrong answer here. If you write something completely irrelevant, yes, wrong. But you won't write like that because it's very clear. Boys and girls, are we clear? Pretty basic, right? Pretty basic. Right, do the same thing for customer. Customer, obviously, guys, obviously, here the KPI is successful, percentage successful treatments. So there also I see a decline, not achieved. Why? Why is that? Exactly. They're approaching teaching hospitals. They're getting newly, qualified people. What can we do for that? What can we do? No, they're anyway trained. Not exactly, no experience. So what can we do? Exactly, get a few experienced medical personnel. Pay them. Very good. Yes. You can see, request a few experienced medical personnel to perform treatments or oversee, supervise. Get them to come, at least like supervise these people. Tell them, okay, this is right, this is wrong. Anything along these lines are accepted people. Are we clear? Okay. No. That's wrong, Amjad. Why is that? You're not hiring people. You're not paying them. They're working voluntarily. This explanation is wrong. Right? Your explanation is wrong. Please understand that these people are, majority of the workforce is voluntary. Voluntary. Are we clear? Now, yes, now, see, the main reason why your cost is going up is not because of doctors. It's because of number of operations. So again, your argument is not very valid. You get it? It's not valid. Right? You have not considered the operations. Yes. Right? I wouldn't talk about doctors here. I will talk about operations, treatments. Are we clear? Right? Okay. Any other points that you wrote, guys? Any other points? Any other points? Same, almost the same. Right. People, what can we say for this functional efficiency? Yeah, exactly. What is this in like in very simple terms, what is this? Lead time, no? Lead time. Lead time is the time that you have to wait. The time that you have to wait until what? You call and you order, and then you wait for 7 days. Then only you get your items. That's your lead time. The time gap between placing the order and receiving the order. 7 days. What do you think? Not great. Not great. Guys, now don't forget they have 12 treatment centers. 12 treatment centers. See? 12 treatment centers. So their lead time is like fixed. What does that tell you? What does that tell you? Come again. True. Now don't forget that this is a charity, right? It's a charity. So, and they have 12 locations. Okay, they have not improved. More than that, what else can you say? What else can you say? Guys, they have been in this thing in Sealand for 10 years, no? That's a long period of time. So what you can say is, look here, yes, they have not improved. Ideally, yes, they have to improve. But let's not forget the fact that they have 12 centers and they are a charity, right? They're getting these for, are they getting these for free? Well, some supplies. See, look at this point. It is rare for the treatment centers to run short of supplies, meaning they have supplies all the time. So 7 days is not bad. Are we clear, guys? 7 days. See, it is rare for treatment centers to run short of supplies. It's rare that they run short. So frequently they, all the time they have the supplies. Are we clear? Guys, now 7 days, it's not a bad thing, is what I want you to understand. It's not a bad thing. Ideally, they should improve, but it's not a bad thing. Are we clear? If you want, you can say, look here, they have 12 centers, they have been operating for 10 years, meaning they have good connections with suppliers. You can say that if you want, but it's not compulsory. If you say 7 days is bad, then that's a bit of a problem. 7 days isn't bad because they're not running out of supplies. That's fine. Are we clear? Right. Okay, moving on. What else can be? Innovations, people, innovations. Wow. An impressive 20% of procedures are new ones. Brilliant. Objective is being achieved. Even this internal business, guys, I think the objective is being achieved, right? Average number of days is still 7, right? That's like 1 week. 1 week. And let's not forget that they are running only what? They are running a charity to cure blindness. People, see, the disease is relatively easy to cure. It's not a life or death sort of a situation. Are we clear? So 7 days, in my opinion, shit, it's not bad.
They introduce new procedures. If they introduce new procedures, still the days are always maintain the levels.
Wait, hold on. They have introduced new procedures, okay? Yeah, come again, Asmin. I didn't get your point.
Procedures has been increased.
Yeah.
But the average number of time taken have not increased because of the.
You're linking average number of time taken and new procedures. Okay, so what's the logic? I don't see. Okay, tell me. Please help me understand.
Like, there are new procedures being introduced.
Then you have to get your supplies like on time.
Maybe supplies might get,
Suppliers might get, but
like, must be take quicker to have supplies. Usually they have this 5% of
right. Okay, I get the point. I get the point. Because the number of procedures are increasing, you have to get your supplies fast. That's your logic. Huge increase, yes, 5 to 20%. Okay. Okay, definitely, yes. I didn't see that. Brilliant. Yeah, it makes sense. Makes sense, definitely. Guys, as long as you can communicate that to the examiner clearly, right? If the examiner is also like, what is he saying? I don't get it. You have to clearly explain it, right? Examiner will look at it. Okay, what is this guy saying? Okay. If your language is not very convincing, right? If you're unable to communicate what you have inside you know, whatever that you want to communicate clearly, no marks. But that's a, you know, very good point. I did not see that. So you're saying, look here, average time taken should go down, because especially given the fact that percentage of new procedures are increasing. Good point. Brilliant. I like that. Makes sense. Very practical. So did you connect that with internal efficiency? Did you talk about that? Where did you talk about it, guys? Good. Brilliant. Yes. Definitely. Correct. Right. Good. Yes. Not really. No, they're not getting. No, actually, you know, they have a valid point. New procedures. See, percentage of new procedures. No, so new procedures actually, you know, it's a huge increase. It's a valid point. Qualified staff, they are anyway newly qualified, right? Newly qualified. So that's why the number of new procedures are high. You guys have a valid point, right? To do more and more new procedures, yes, you need your supplies on time. That makes sense. Yes, very practical. Practical point. Innovations definitely achieved, guys. Now, successful treatments, is it increasing or decreasing? That's decreasing. No? Yeah, we say we have a point, because these are newly, you know, basically interns. Yeah, pretty basic. The second part, now you can complete this. I don't want to, like, you know, write the whole damn thing, guys. The next part, I think it's fully theory. Benefits. Guys, now always link the theory part to the case study. Explain the benefits of an organization using balanced scorecard to measure performance instead of using solely financial measures. 4 marks. Benefits of balanced scorecard. My goodness. Like a generic answer. Yes, that's a valid point. It's a charity. You don't have financial performance anyway. Like, you do have financial performance metrics, you know, a small number. You don't have GP margin, ROC, none of those are valid here. So you can say, yes, you know, in the context of this charity, balanced scorecard is the most appropriate method or most appropriate performance model to measure or to evaluate performance, Definitely a valid point. See, you're linking the case study. What else? What else? Guys, by measuring all these, you can identify your weaknesses. You can identify your weaknesses, areas for improvement. Talk about that. Now, you guys had a valid point there. Number of new procedures and suppliers. Lead time. Talk about it. We saw that thanks to the balance scorecard. Do you get it? Yes, and guys, that's a very good point. Yes, thank you. You're looking at long-term performance. You're looking at the vision, mission, whatever. It's not just you calculating some ratios and telling look here, this has increased, this has decreased. No. Right at the heart of balance scorecard, you have your vision, mission, all that. Okay. Now in the exam, let's say you are running out of time. Ideally, yes, for 4 marks, at least 3 points. I would say 3. 4 is not. 4 is a bit. No. Explain. So at least 2. But better to write 3. Let's say you're running out of time in the exam, right? Now they tell you explain. Let's say you have around 3 to 4 points in your mind, but only 3-4 minutes, for you to finish the paper. What do you do? Do you explain 1 point, in full, or you briefly type a few points? Definitely. Always, if you are running out of time, right, cut down your explanations, keep it very short, right? Write a number of points. Even if you have time, don't explain a lot, because examiner doesn't want that. Examiner wants to see whether you know a few. You writing, you piling on something, examiner will not give you any marks, especially when you're running out. Small sentence, number of points. Are we clear? People? Please do that. That's a small exam tip, people. Are we clear? Online people, don't write a lot. Brief points, but number of points. Are we clear? Right. So, guys, now the reason why I wanted to look at this question, number 1, because I wanted to show you how to answer, balance scorecard type of questions. Sometimes it's very clear like this. They give you the quadrants, critical success factor, financial performance, all that. Sometimes no, right? They ask you to evaluate the whole thing. Are we clear? Right? Now, I'll be looking at only one more performance analysis question. That's it. Right? Because we have other areas to look at. Are we clear? Yes? Now, in your exam kit, you have enough and more questions. Now, people, you will not have the time to answer all of them. Right? Don't try to answer all of them. At least go through the case study, look at the requirement, come up with a plan. Do that. Right? Right now you have time. Yes. You have time. But towards the end, right? If you feel like, oh my God, I have not answered, I've answered only these questions. That was only in the revision class. I did not do any question on my own. If you are feeling like that, the best thing is to do is look at a few questions. Don't try to answer them in full. Look at the requirement, case study, come up with a plan. More than enough. People, before you sit for the exam, you need to get exposed to as many as questions possible. Are we clear? From performance, if you look at, say, 15 questions, you're golden. 15. Okay, we have looked at 7 now. We have looked at 7. Yeah. Last week 4. Here 3. Right? 7. Not enough in my opinion. I'll be looking at 3. That's it. Are we clear, boys and girls? Right? You have limited time. Use it wisely. Right? When you answer, try to time it. Time it and do a question. You will fail miserably. That's fine. That's fine. Time it and do it. 1 or 2 questions at least. Are we clear? Yeah. By the way, mock exam. No. Don't worry about that. So for the balance scorecard question, how deep we should explain? No, not. Just a small explanation should be enough. Okay. Okay. Just a small explanation. 3 to 4 lines, yeah, should be fine. As long as you have your points, you get marks. Right? As long as your answer is practical and it's rich with, the points, you get marks. They will look for how and why, right? Your explanations, capturing why part and capturing how part. That's it. Are we clear? Get to the point straight away. No bullshit, no introductions, just straight away. Address the requirement. All right, people. Right. So, yep, that's it. We have used our time very effectively today, people. We looked at 3 solid questions. Brilliant. Next week, we'll be looking at questions from decision making. Yes, those areas. Linear programming, everything. Relevant costing, all those. Okay. Right, we'll do. I'll put it on. Of course, I'll put it on. Yeah, thank you so much. Thank you, people. All right, guys, I'll see you next week. Thank you so much. Wait. Right, thanks. Right. Okay, all right, people. Thank you so much. Thanks, guys.